You stared at your phone in complete silence. The notification sitting on the screen was larger than your monthly paycheck. For a moment, you wondered if this was really happening. Years earlier, you couldn't even save a few $100s consistently. Every bill felt like a small emergency waiting to happen. Yet somehow, everything changed. Most people would have quit long before reaching this point. The journey took far longer than you expected. What made the difference was a decision that seemed insignificant at the time. The money wasn't the hardest part. The hardest part was continuing when progress felt invisible. That's where almost everything fell apart. Every month felt exactly the same. You worked hard, got paid your bills, and waited for the next paycheck. Deep down, you wondered if life would always follow this cycle. At first, you believed earning more money would solve everything, but every raise seemed to disappear into new expenses. The finish line always moved farther away. One evening, you began searching for ways to build income outside of work. Most of the promises online sounded unrealistic. Still, one concept kept appearing over and over again. That concept was dividend investing. Instead of constantly working for money, investors owned shares that paid them regularly. The idea sounded simple, but almost too good to be true. The more you learned, the more curious you became. Companies were paying shareholders simply for owning stock. For the first time, you saw a path that didn't depend entirely on your paycheck. Then you discovered the math behind financial freedom. If a portfolio earned a 4% dividend yield, every $100,000 invested could generate about $4,000 per year. Suddenly, the dream had numbers attached to it. You set a goal of generating $40,000 per year from dividends. The calculation showed you would need roughly $1 million invested. The number felt impossibly large. For a few minutes, you considered giving up entirely. $1 million seemed like a destination reserved for other people, but something inside you refused to walk away. Instead of focusing on $1 million, you focused on your first investment. The amount wasn't impressive, but it was enough to begin. The first dividend payment eventually arrived. It wasn't enough to buy a meal. Yet seeing money appear without working extra hours felt strangely powerful. Most people would have ignored such a small amount. You almost did too. But that tiny payment represented something much bigger than its dollar value. It represented proof. The system actually worked. The challenge now was staying committed long enough to see meaningful results. Every month you invested a portion of your paycheck. Some months were easier than others. Progress was slow, but it was real. As your portfolio grew, so did your confidence. The dividend payments slowly increased. The changes were small enough to miss if you weren't paying attention. Then life happened. Unexpected expenses arrived one after another. Suddenly, investing became much more difficult than before. At first, you tried to keep investing through the setbacks. You told yourself the difficult months would pass quickly. Unfortunately, the expenses kept coming. One month, you couldn't invest anything at all. Watching your streak end felt surprisingly painful. It was the first time you questioned whether you could really stick with this plan. You started comparing yourself to people online. Some investors seemed to reach six figures effortlessly. Meanwhile, your progress felt painfully slow. The comparison made everything worse. Instead of appreciating your progress, you focused on how far behind you felt. Motivation slowly began slipping away. One night you opened your portfolio and did the math again. At your current pace, reaching $1 million could take years. The realization hit harder than expected. For the first time, you seriously considered quitting. The goal felt too distant to matter. You wondered if your effort would ever be worth it. Then a small detail caught your attention. Even though you hadn't invested much recently, your dividends were still arriving. The amount was small, but the consistency was real. That was when you realized something important. Progress wasn't only coming from new contributions anymore. Your money had started doing part of the work. The realization reignited your motivation. You didn't need overnight success. You only needed to stay in the game long enough for compounding to work. You returned to your routine with a different mindset. Instead of chasing quick results, you focused on building a system. The pressure immediately felt lighter. Then the market dropped unexpectedly. Stocks that had taken months to build suddenly lost value. Watching your portfolio shrink felt like a punch to the stomach. Everywhere you looked, people were panicking. Headlines predicted more losses ahead. Fear spread faster than facts. You questioned every decision you had made. Maybe the critics were right. Maybe investing wasn't as reliable as you believed. For several days, you considered selling everything. The losses looked real. The future felt uncertain. But before making a decision, you reviewed the companies you owned. Most of them were still profitable. Most were still paying dividends. The stock prices had changed. The businesses themselves had not changed nearly as much. That distinction became incredibly important. Instead of selling, you made a difficult choice. You kept investing. It felt uncomfortable, but something told you to continue. Months later, the panic began fading. Markets slowly stabilized. The decision that felt reckless started looking wise. More importantly, your dividend income had continued growing. The payments were still far from life-changing, but they were becoming impossible to ignore. For the first time, you could imagine the future becoming real. Yet a challenge was quietly forming beneath the surface. You didn't realize what it would cost. Your portfolio was finally gaining momentum. The dividend payments were arriving more frequently, and the numbers looked better each quarter. For the first time, the dream felt slightly closer. Friends began upgrading their lifestyles. New cars appeared. Expensive vacations filled social media feeds. It was hard not to feel left behind. You could afford some of those things too. Years of disciplined saving had given you options. The temptation was stronger than you expected. Part of you wanted immediate rewards. After all, you had worked hard for your money. Delaying gratification started feeling unfair. That night, you reviewed your long-term projections again. Every dollar spent today represented future dividend income you would never receive. The choice suddenly became much more difficult. You decided to stay the course, not because it was easy, but because the future mattered more than temporary excitement. The decision felt painful in the moment. Months turned into years. The portfolio kept growing. Slowly, the small dividend payments that once seemed meaningless became significant. One day, a dividend payment covered your electricity bill. It wasn't life-changing, but it felt symbolic. Something important was happening. Later, another payment covered groceries. Then another covered internet expenses. The portfolio was beginning to participate in your daily life. The progress felt exciting, yet excitement introduced a new danger. Confidence can sometimes become overconfidence. You started exploring higher-yield investments. Some promised dividend returns far above the traditional companies you owned. The numbers looked incredibly attractive. At first glance, the opportunity seemed obvious. Higher yields meant reaching your goals faster, but something about it felt too easy. Instead of rushing in, you spent weeks researching. The deeper you looked, the more risks you discovered. Many of the highest yields came with serious trade-offs. Some companies were paying huge dividends because their businesses were struggling. Others had histories of cutting payouts during difficult times. The attractive numbers suddenly looked less attractive. You chose stability over excitement. The decision wasn't flashy, but it protected something much more valuable than short-term gains. Years continued passing. Your portfolio looked nothing like it had in the beginning. What once seemed impossible was slowly becoming reality. The dividend income reached thousands of dollars per year. It still wasn't enough to live on, but the gap between reality and your goal had narrowed considerably. Then an unexpected thought entered your mind. What if you were sacrificing too much today for a future that wasn't guaranteed? The question lingered longer than it should have. The question followed you for weeks. You had become so focused on financial freedom that you rarely stopped to enjoy the present. Balance suddenly became the new challenge. Eventually, you made an adjustment. You continued investing consistently while allowing yourself small rewards along the way. The journey became more sustainable. The balance worked surprisingly well. You felt less pressure and more gratitude. Consistency became easier when the process felt enjoyable. Then a new problem appeared. It wasn't dramatic or obvious. In fact, most people would have completely missed it. Inflation had quietly increased your living expenses. The income target you originally calculated years ago was no longer enough. The finish line had moved again. The realization was frustrating. You had worked for years and made tremendous progress, yet the goal suddenly felt farther away than expected. For a brief moment, doubt returned, the same doubt you felt years earlier, and this time it threatened to hit even harder. You stared at the updated numbers for a long time. The original goal that once felt impossible had become achievable, yet inflation had raised the cost of freedom. It felt like the finish line had moved just as you were getting close. Part of you felt angry. You had spent years making sacrifices and staying disciplined. Seeing the target increase felt deeply unfair. For several weeks, your motivation dropped. You still invested, but the excitement was gone. The journey felt heavier than ever before. Then something unexpected happened. You reviewed your portfolio history from the very beginning. The numbers told a story you had forgotten. You remembered the day your first dividend arrived. Back then, the payment couldn't even buy lunch. Now the annual income was covering entire categories of expenses. The realization changed everything. You weren't the same person who had started this journey. Your habits, knowledge, and discipline had all grown stronger. You stopped focusing only on the remaining distance. Instead, you focused on how far you had already come. That shift gave you new energy. Then the economy entered another difficult period. Markets became volatile again. Fear returned to places where confidence once existed. This time, the losses were much larger because your portfolio was much larger. Every market swing felt personal. The emotional pressure became intense. Sleep became harder. Every news headline seemed negative. You started questioning whether years of effort could disappear. For the first time in years, you thought about abandoning the plan. The temptation to protect what remained felt overwhelming. Fear had become louder than logic. Then you noticed something important. Despite all the chaos, many of your dividend payments were still arriving. The income stream was proving more resilient than the market prices. The lesson hit you harder than any financial book ever could. Stock prices moved daily. Cash flow from quality businesses followed a much longer timeline. Instead of quitting, you doubled down on patience. It wasn't confidence that kept you going. It was commitment. That decision would eventually change everything. But at the time, it felt completely invisible. No celebration followed, only continued effort. Months passed, then years. The recovery happened slowly enough that most people wouldn't have noticed. Your portfolio reached levels that once seemed impossible. The same goal that had scared you years ago was now within reach. The dividend income continued increasing. First it covered utilities, then groceries, then several months of expenses at a time. You started noticing a subtle change. Work no longer felt like a necessity, it had become a choice. The feeling wasn't excitement, it was peace, the kind of peace that comes from knowing you have options. One day you opened your annual dividend report. The number on the screen made you pause. You checked it twice. Years ago, you set a goal of earning enough dividend income to support your lifestyle. Now the portfolio was producing exactly that. The dream had become reality. The moment felt surprisingly quiet. There were no fireworks, no dramatic celebration. Instead, there was gratitude. Gratitude for every contribution, every reinvested dividend, and every moment you almost gave up but didn't. You remembered the first tiny dividend payment. Back then, it felt insignificant. Now it felt like the beginning of everything. The journey had never been about getting rich quickly. It had always been about creating freedom one decision at a time. That truth became crystal clear. Most people never see the power of compounding because they quit too soon. They expect dramatic results before the process has time to work. You nearly made the same mistake. The portfolio wasn't magic. It was simply years of consistent action stacked together. Small choices had created a massive outcome. And that's when you understood something most people never do. Financial freedom is rarely built in giant leaps. It's built in thousands of ordinary days. You almost didn't make it here. The doubts, setbacks, market crashes, and slow progress nearly convinced you to quit. But staying consistent allowed your money to eventually work for you. One day, it's just another normal morning, nothing special. Your investments are working in the background, money coming in quietly. No stress, no pressure, you finally made it. And then, a truck hits you just like that. No warning, no time to think, your story ends right there. But your money, it doesn't stop. It keeps paying, just not to you.